Hello students, today we'll solve the 8th problem in our admission chapter. So open your textbook to page 165. This is the question. The balance sheet of Sahil and Nikhil is given. They share profit and losses in the ratio of 3:2. So their old ratio is 3:2. They admit Varad as a partner on the following terms. Now we are required to prepare profit and loss adjustment account, capital account of partners, and balance sheet after the admission of Varad. Let's mark the adjustments. There's adjustment on building, then on furniture and debtors. Now let's prepare the necessary accounts. This is profit and loss adjustment account, partners capital account, and new balance sheet. Then the postings. Creditors will be recorded on the liability side of balance sheet. Opening capital balances of partners on the credit side of partners capital account. Then furniture, building, debtors, closing stock. All this will be written on the asset side of balance sheet. And for cash in hand, we prepare a working note. The postings, creditors on the liability side of balance sheet. Opening capital balance of partners on the credit side of partners capital account. Then furniture, building, debtors, closing stock on asset side. Cash in hand, we prepare a working note and we write the opening balance of cash in hand 20,000. Now we'll pass the effects for adjustments. The first adjustment, Varad was to pay 1 lakh for his share of capital. Now here the new partner who is admitted is bringing in 1 lakh as his share of capital. So we record this on the debit side of cash in hand in the working note to Varad's capital account 1 lakh, and on the credit side of Varad's capital account 1 lakh rupees. The second adjustment, he was also to pay 40,000 as his share of goodwill. Now here the new partner is bringing goodwill in cash. It has to be credited to the old partners in sacrificing ratio. So we have to calculate the sacrificing ratio here. The new profit sharing ratio is given as 3:2:3. Old ratio of Sahil and Nikhil 3:2. New profit sharing ratio as given in the adjustment 3:2:3. So to calculate sacrifice ratio, old ratio minus new ratio. For Sahil, old ratio 3/5 minus the new ratio 3/8. Here we have to equalize the denominators. After equalizing the denominators, we subtract and we get 9/40. For Nikhil, old ratio 2/5 minus new ratio 2/8. Again, after equalizing the denominators, we subtract and we get 6/40. Now 9:6. We reduce this ratio to lowest term. We get the sacrifice ratio as 3:2. The new partner is bringing rupees 40,000 as his share of goodwill. Now we divide this 40,000 among Sahil and Nikhil in the sacrifice ratio. So for Sahil, 3/5 into 40,000 is equal to 24,000 and 2/5 into 40,000 is 16,000. Now the entries for goodwill is, when the new partner is bringing in goodwill in cash, cash or bank account debit to goodwill. And then when it is credited to the old partners, goodwill account debit to Sahil's account to Nikhil's account. Now your goodwill account credit and goodwill account debit is set off. So the net entry what we have to pass is cash account has to be debited by 40,000 and we have to credit Sahil's account and Nikhil's account by 24,000 and 16,000 respectively. So we write the amount of goodwill brought in cash on the debit side of cash in hand account and credit side of Sahil's and Nikhil's capital account. Then the fourth adjustment, the partners decide to revalue the assets. Building. The value of building in the books is 72,000 and now it has to be revalued to 1 lakh. That means there's appreciation in the value of this asset, 28,000. So we add this 28,000 in building to bring the value of building to rupees 1 lakh. And since this is an increase in the value of asset, we record this 28,000 on the credit side of profit and loss adjustment account. Furniture, the value of furniture appearing in the books is 60,000 and it has to be revalued to 48,000. So there's a decrease in the value of this asset, which is rupees 12,000. So we deduct rupees 12,000 from furniture, and since it is decrease in the value of this asset, we write on the debit side of profit and loss adjustment account to furniture account rupees 12,000. Debtors is shown in the book as 40,000 and now we have to reevaluate to 38,000 in view of likely bad debts. So there's decrease in the value of debtors by 2,000 and this 2,000 is your RDD. So we write 2,000 as RDD from debtors and deduct it and write this on the debit side of profit and loss adjustment account to debtors rupees 2,000, or we can write this as to RDD rupees 2,000. The fifth adjustment, it was found that there was a liability for 3,000 for goods in March 2017 but recorded on 2nd April 2017. Our year ending is 31st March 2017 and these goods which were purchased belong to this current year. That means this is an unrecorded liability for this current year. So we have to record this liability now. So this unrecorded liability, we'll show it on the liability side of balance sheet. Liability for goods 3,000, or we can add this in creditors as this is liability for goods and this is an increase in the liability. We'll show this on the debit side of profit and loss adjustment account. Now we close cash in hand account, that is the working note, and we get a closing cash balance of 1,60,000, which we'll write on the asset side of balance sheet. We are done with all the adjustments. We proceed with the closing entries. Close the profit and loss adjustment account. We get profit on revaluation. We distribute this profit on revaluation among the old partners in old profit sharing ratio. So Sahil's share in the profit is 6,600, Nikhil's share 4,400. We record this on the credit side of partners capital account in Sahil's and Nikhil's amount column respectively. Then we close partners capital account. We get the closing balance of partners. Sahil rupees 1,10,600, Nikhil rupees 1,20,400 and Varat rupees 1 lakh. We write this on the liability side of balance sheet as partners capital. Take the total 3,31,000. Now we take the total of liability side and asset side of your balance sheet. We get 3,94,000. A balance sheet has tallied. I'm sure you have understood this. Thank you.